This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. Now, I've been teasing a podcast about the bank stocks for a while, and I just haven't done one yet. And I felt like this week was a good week to do it because people are starting to look around for cheap stocks to buy for 2026. Yes, we're in November, but the end of the year is fast approaching and all of us are looking forward. I know I am. And so we're thinking, what is still cheap here in 2025 that I can buy into 2026 that is not only just the cheap side of things, but will have the other factors we look for, growth. We want something that's cheap that has the growth. Now, a lot of the hot names are a little too hot for us as value investors, so we are staying out of some of those. But other than energy, the only cheap industry is in the banks. And I know many of you think, oh, they're boring and they don't go anywhere. And that might be, but eventually, and I don't know when, but eventually they will go somewhere. And thankfully, a lot are paying very nice dividends right now. So if you are patient, you can get 3%, 4%. Some are in the fives now, 5% on that dividend, while we're waiting for the stock to really do what I think the banks are going to do, and that is to break out. So I tried to figure out a screen to get us the cheapest bank stocks. And it's not really that easy because we can't really search by sector for this, because the financial sector includes a lot of other financial companies, including insurance, mortgages, companies like that I don't want. So I had to switch to the industry, which you can do on Zacks.com on our basic screens, but they are subdivided. There's not just one industry that's like the banks. They are banks dash foreign. They are banks dash major. They are banks dash major regional. And then we have them based on geography: Midwest, Northeast, Southeast, Southwest, and West. So I had to do a screen in each of these categories, but I did exclude the big banks, the major ones, because I don't consider those to be cheap anymore. A lot of them, JP Morgan, Bank of America, are hitting new all-time highs and have gotten too expensive for my blood. But the real cheapness in the bank stocks lies beneath them, some of the bigger regional players, and then in the community banks, the smaller banks underneath them. So how do we find cheapness in the bank stocks? Many of you listen to these podcasts know already what we use. We do not use PEs, the price to earnings ratio, because it doesn't really tell you the fundamentals about what's going on at the banks. The bank analysts use price to book, and they will tell you, and I've said this many times on the podcast, to buy at a price to book of 1 and sell when it gets to 2. Some of the big banks like JP Morgan are trading over 2 now on the price to book. That's what I mean by, it's not cheap anymore. I'm taking a quick look just to see. JP Morgan's price to book is now 2.4. So I don't really see much more upside in JP Morgan right here after this big run that it's had. So that's why we're looking at these others. I did want to screen with just the price to book. So I did 2 and less because that'll get us hopefully what I want. I did not screen for Zacks rank or anything else, not even size of the bank, market cap, because I just wanted to get a pure look at what are the cheapest. So I did go through and run the screen on each one of these regions. So it was 6 different screens that I ran. And I'll just tell you the basics of what we found. So on the banks dash major regional, there were 10 banks that had 2 and under. On the Midwest, there were 35 banks. On the Northeast, there were 117 banks that are cheap. Southeast had 82, Southwest had 20, and the West had 34. So obviously, we could just choose the cheapest on a price to book ratio in each one of these, but I've been around the banks long enough to know that maybe I don't want a bank that's just 300 million market cap or 600 million market cap. So I did go in and put a limit on the market cap. I wanted $1 billion or more for the market cap. So I didn't get the the much smaller community banks. I got kind of those mid tiers, which are going to be the smaller regionals, not the major regionals, if that makes any sense. So then for those, obviously the major regionals, all of them qualified. So we got 10 banks for that. Did I write it down for the Midwest? It looks like I did not. So I'm not sure how many I got on the Midwest. On the Northeast, when I added the market cap, I got 20 banks on the Northeast, down from 117. Southeast, I got 31 banks, down from 82. Southwest, I only got 7 banks, down from 20. And then on the West, I got 14 banks, down from 34. So you can see just adding that market cap did eliminate a decent amount. Now, the cheapest price to book that I saw was on a bank in the Southeast, and it was 0.09. Now, this makes me a little nervous because while we do want cheapness, getting that low means maybe something else is going on, right? And just like having like a PE of 2, something else might be going on there. So sometimes cheap isn't always the best. And just looking up this bank right now, it doesn't even have a Zacks rank. So it did show up in my screen because we didn't screen for the Zacks rank, but this one does not have a Zacks rank. It has a market cap of just 252 million. So that's why does have a price to book, even though we don't have a PE on it. So that's how it showed up in there. So you do have to continue to look at whatever comes through these screens and maybe bypass some of these really little banks that come through. So after doing that and after adding the market cap, I did decide to take a look at the cheapest of these slightly bigger banks. And not all of them passed muster either, even though they're bigger. There were some that were just the wrong Zacks rank. We didn't screen for the Zacks rank, but if I'm looking for cheap banks, I do want something that's at least a 1, 2, or a 3, which are the strong buys, the buys, and the holds. I definitely don't want a 5. And even 4s, which are the sells, I really don't want to deal with that either, given the sheer number of cheap banks on these screens. So I did kick out a few banks that didn't qualify based on the Zacks rank. But otherwise, even without including the Zacks rank in the original screen, and then just kind of manually looking at it as I went through some of these banks, I got like some interesting earnings growth scenarios with some of these. And that's what I've been seeing just on screening for banks in general. Banks that have come up for me for the value investor portfolio here at Zacks and an insider trader. I currently own 2 banks in insider trader, and one of them made this list. So like seeing that, I'm not talking about it today because I have had it on the podcast in the past. So something good is going on at the banks. The earnings have rebounded this year in 2025, and 2026 is looking up too, even with a depressed housing market. And a lot of these smaller banks have a lot of mortgage business, which is a nice little add for them. But Some of them also have wealth management. If they're kind of a mid-tier regional bank now, wealth management is a big business for these banks now, especially with all of those baby boomers now heading into retirement. They do want some assistance on planning. And so wealth management and having assets under management is an easy moneymaker for a lot of banks now. So without further ado, let's talk about 5 of these. I did pull out 5, and let's see what's going on. So we're going to lead off with the biggest bank, and it's one of the top 10 U.S. commercial banks. It's Truist Financial, ticker T as in Tom, F as in Sam, or T as in Tom, F as in Frank, F as in Frank, C as in Charles, TFC, Truist Financial. This is out of the major regional screen, and market cap of $56.7 billion. It's a number 3, which is the hold right now. Shares haven't really been going anywhere for the past 2 years, but again, that's why it has gotten cheap. Price to book ratio is just 0.95 on Truist. So I'm liking that. It's actually all the price to books on any of these ones I'm talking about today are all under 1 even. And there were many. I had many choices under even 1. But again, you have to go in and look at some of the other fundamentals to make sure that something's not wrong and that it's too cheap. But this is around 1 for Truist. It's at 0.95. They do pay a dividend. It's $2.08, which is yielding 4.7% right now. And for those of you who are out there, just trying to accomplish like a 7% gain a year, it doesn't take the shares too much extra once you're getting nearly 5% on the yield for the dividend to get that 7%. And again, it's cheap on the price to book. Earnings expected to be up 6.5% this year, and 2026, 13.2%. So I'm liking all that I see on just this part. Now, you do have to go in and see where might some risks be with certain banks, but the analysts look a little bullish on 2027 as well on the chart, on the price of consensus and surprise chart, that is also showing further earnings growth. So that is bullish to me. And this is one of the bigger banks. So we do have a lot of analyst coverage. We have 9 analysts for this year and 9 for next year. That's a lot because it's a bigger market cap bank. So I'm trusting in the analysts on this one. But if you're looking for one of the bigger banks, but not JP Morgan, Bank of America, and this one is cheaper on a price to book, then keep this one on your watch list, Truist Financial, TFC. Okay, now we're going to switch over to the smaller banks. And the first one was from the Midwest region. I feel like I'm like an Olympic judge or something, or, like some kind of athletic competition. The Midwest region is First Merchants Bank. It's ticker F as in Frank, R as in Robert, M as in Mary, E as in Edward, FRME. And just a reminder on the banks, there's hundreds of banks, especially when you get down to the community bank level. And there's been a lot of consolidation, a lot of these kind of mid-size regionals that, like this one in the Midwest, they're headquartered in Indiana. They have 111 banking center locations in Indiana, Michigan, and Ohio. They have the general business banking and, residential, resident personal banking, I guess it's called. And as well as wealth management. Like I said, wealth management is big industry for these banks now. Market cap of $2 billion. But again, like I said, there's a lot of these banks, and that's why people don't really find it all that interesting to invest in the banks, even if the outlook looks good for earnings, because there's so many of them. How, other than the big guys, like we've mentioned, the JP Morgans of the world, how do you really differentiate? You kind of don't, But I do encourage people who have a favorite bank in their region. Maybe they bank at one of their regional banks and they know what's going on at that bank. They have some, maybe they do business banking with them, to use your own knowledge sometimes to find some hidden gems out there in addition to the screens. But First Merchants Bank, again, market cap of $2 billion. So that's a lot smaller than Truist, which is $56 billion. This is a Zacks number 2, which I'm liking. And they have also paying a dividend. It's $1.44 or 4.1% yield. So again, like these are some nice yields if you're looking around there for income. Price to book 0.85. So also under 1. Like I said, all of these are under 1. And earnings 2025 expected to be up 11.5%. 2026 another 7. And then on the price consensus and surprise chart, 2020, that's 2026. 2027 is also looking bullish. What's been coming in on 2027, showing some nice earnings growth again. How many analysts on the smaller bank? We have 3 for this year and 2 for next year, and they've all been raising estimates. So that's what I like to see. That's how we got the Zacks number 2 rank, which is the buy. But these shares kind of just been stuck there too. All the banks haven't really done much in the last 2 years. They're out of favor. That's why they're cheap. But as value investors, we like to poke around now and get, especially if you're income investor as well, and get some dividends for our patients. If they have a pullback like this bank has had, First Merchants, in the last couple of weeks, then even a better buying opportunity. So keep it on your watch list as well. First Merchants, FRME. Okay, moving on. I have, this is a Northeast bank, Valley National Bank Corp, ticker V as in Victor, L as in Larry, Y, VLY, like Valley. And they have a market cap of $5.8 billion. And they do call themselves a regional bank. They are in New Jersey, New York, Florida, Alabama, California, and Illinois. So that's like, it's listed as Northeast because that's probably where they get the New York, New Jersey angle. And then they've been acquiring banks in these other areas. The banks are trying to expand, and one way to grow is by acquiring in other areas that are seeing a lot of growth, or New Jersey, New Yorkers are moving to Florida. So they go down because you want to keep your bank. So you're willing to stay with them once you move down there. This is a bigger bank, and I was noticing they have a lot of CRE loans, the commercial real estate loans. They have $28.7 billion loan portfolio. 2.5 of that is in the construction loans, and that's an area that I know well from Bank OZK, which is one of the biggest construction lending banks out there. They're in Arkansas. But this is something to also keep in mind when you're looking at these banks. What is the business like? This is a bigger bank, and so they are giving out loans, construction loans and otherwise, to, say, commercial real estate. So know what your bank owns. But Valley National Bank Corp is a number 2, a buy stock as well. They also pay a dividend. They're paying 44 cents because the stock is at $10.44. And so 44 cents is yielding 4.2%. Very nice. Price to book, 0.8. Did I say what First Merchants price to book? 0.85. Yeah, I think I did. So this is 0.8 on Valley National Bank Corp. And earnings for this year up 54.8%. But the prior 2 years were not the greatest. 2024 down 41%. So this year, kind of just a rebound, up 54, but not good last year. But then look at 2026, up 28%. So that's where we're starting to see the bullishness into next year. And then also on the price consensus and surprise chart, 2027 is on the way up as well. The estimates being revised higher there. We're getting the number 2 rank because all the analysts, 4 are higher in for the full year. So nobody is cut and they're all in agreement. So there's 6 analysts for this year, 6 for next year, 4 have raised for both years. So I'm liking all of that. Something good must be going on. And remember, banks like this continue to buy small banks, and that is how they can expand, how they can grow those earnings by going into new regions and gobbling up people. So, but this is not a bad thing in the banking world. This is considered to be good. But that one, Valley National Bank Corp, VLY is the ticker for our Northeast Bank. Then I did the South. This is the South. No, this is the South. And I did Simmons First National. They are tickers. S as in Sam, F as in Frank, N, C as in Charles. SFNC. That's a real tongue twister there. Market cap of 2.5 billion. They are Zach's number 3, so that's the hold. And right away on their website, before any other explanation, what it tells us is 116 consecutive years returning capital to shareholders through cash dividends. They were founded in 1903. So not that long after, they started paying a dividend, cash out, and they continue to do it. So a bank like this, proud of that kind of track record. That's through the Great Depression. That's through world wars. That's through the 60s and the 70s. That's through the Great Recession when the banks had some issues. And now here we are through the pandemic, and they're still paying it. So very impressive. What is the dividend? It is 85 cents, and that is 4.9%. So almost 5 for Simmons. That's real juicy there if you're looking around for dividends. They are headquartered in Arkansas, just like Bank OZK. 220 branches in Arkansas, Kansas, Missouri, Oklahoma, Tennessee, and Texas, but big in Arkansas, as you might expect. What about earnings? 2025 up 19.9 and 2026 up 13.6. Again, these are great earnings growth. A lot of the banks were in the red for 23 and 24 as the Fed had tightened and the mortgages kind of went away, mortgage businesses. But if they have any kind of wealth management, that has turned the corner here. 25, 26, assets under management are at all-time highs with most banks as the stock market surges. So that's helpful for these banks. And then housing will come back eventually, and that will add more business for those who are in the mortgage side of things. And a lot of small banks definitely have mortgage businesses. So we got some nice double-digit growth. Price to book, 0.75 on Simmons. Very cheap here on Simmons as well. And then 2027 is higher. The analysts are looking for some growth in 2027 again, but that's a ways off. But I like to look forward. On the estimates on this one, which is why we're number 3, we have 4 analysts. For this year, 1 is up and 1 is down. For next year, 2 are lower. So, and 1 is up. So the analysts are a little more bearish on next year, but that's probably just them, changing a few things, a few pennies here or there based on what just happened in the last earnings call. I still am liking it, even as a number 3. And these shares also a little weaker recently. So a real buying opportunity in some of these banks here. If you can get them cheap, like we can, then you're going to get that higher yield. And I'm liking what the growth is looking like. So that's Simmons First National, or Simons, not sure how they pronounce it, SFNC. SFNC. And then we're wrapping it up with the Southwest. I didn't choose a Western bank because in some of the Western banks, there were Southwest banks in there. Like I said, they were originally in California or Nevada, and then they bought someone who was in like Texas, and now they're kind of all over. But this one is Southwest. It's Prosperity Bank Shares. How could you go wrong with that name? Prosperity Bank Shares. Ticker is P as in Paul, B as in boy, PB. They are also a number 3 hold. Market cap of 6.2 billion, so a bit bigger on this one. Everything is bigger in Texas. They are headquartered there in Houston. They have business in Texas and Oklahoma. So those of you who are in those states, you probably know Prosperity. Maybe you bank there. They have 283 locations. Most of them are in Texas, but still quite a few in Tulsa and Oklahoma City. Founded in 1983. So they've been around a while. And they do pay the dividend. It is $2.32, which is yielding 3.5%. That's on the lower end of these 5 stocks, which is kind of funny to say because 3.5% is pretty generous, but comparatively, it's on the lower end here. Earnings expected to be up 11.2% this year, and 2026, 9.3%. And then again, looking at the price and consensus chart, because we're getting the 2027 estimates in there too, it's some nice earnings growth for 27 as well. Got a little bit of some analysts raising, some analysts cutting. So a little bit of weakness on the earnings, but not much. And that's why we got the number 3 instead of the 2, like on the other banks where, nobody was cutting their estimates, but cutting is relative. It is only a few pennies here. So for this year, expecting 568, and 60 days ago, well, that's not even good to look at. 30 days ago, it was 569. So it's dropped 1 cent, but 3 estimates are down. For next year, 621. When it was 625 just 30 days ago. So I'm not too worried about that. It's what happens. The bank analysts have to kind of rejigger a few pennies here or there. And we have 8 analysts on this bank. So it is a pretty big bank and a lot of coverage. So I feel better about the earnings estimates and where those are headed on these banks where you got a lot more analyst coverage. It is a lot more difficult with the smaller banks where you might sometimes only have 1 analyst covering, but usually 2 analysts. But even with 2, there's, a lot going on, and it's hard for even them to keep track of a lot of these like smaller cap banks. But don't totally sleep on the small cap banks, especially if it's one you are familiar with in your town or your state, that kind of thing, where maybe, again, you are banking at that bank. But be sure to tune in to their earnings conference calls, any kind of press releases they put out. Pay attention to who is buying up whom. I like that kind of growth, and I like that the bank has a plan to grow their earnings and to get into possibly other states and take some of that business from some of their competitors here. And the banks, again, are all cheap. Prosperity, did I say what the... No, I didn't write it down. What is Prosperity's price to book? For some reason, I didn't put it, but it is under 1. As I was mentioning, all the banks here are under 1, and they are at 0.81. 0.81 for Prosperity. Maybe I didn't write it because I have like PB there, and that's what I'm writing in my notes, PB for the price to book ratio. So I was thinking, oh, I put it down on there, but I didn't. So all of these are dirt cheap on a price to book ratio. If you actually look at the PEs, they're also all under 15. They're around 10, 11, but PE doesn't matter quite as much with these banks. They've all got very nice dividends. You can't go wrong getting those checks or the money deposited directly to you. I always like getting it, and if it's yielding 5%, it's going to be some good payout. So I'm still a believer in the banks, even if we have, the AI and some of these high growth areas. If you're looking for somewhere that's cheap right now, and energy is cheap too, but it has problems with the earnings. But banks are still dirt cheap. And for now, this year and into next year, we don't have the problem with the earnings. We've got the earnings growth, double digit for a lot of these expected in 2026. And so we got the combination of cheapness plus the growth. We're going to get PEG ratios with a lot of these that are also under 1, just FYI, like Prosperity. It has a PEG ratio right now of 0.97. So it's right there as well, both a value and a growth stock, but just maybe not in the area you want to be in. But if you've got some patience, eventually the banks will break out of this 2-year trend that they're in right here. And if you can get it on any of these pullbacks or sell-offs, even better. So keep that in mind. These are the types of stocks right now where you can do dollar cost averaging. So when you do get sell-offs, you add a few more shares, and then you maybe reinvest your dividends. You pick up a few more shares that way too. So let's recap the stocks again. We had Truist Financial, that's the big cap, ticker TFC. We had a Midwest Bank in Indiana, First Merchants Bank, FRME. We had Valley National Bank Corp, a little bit bigger. They've got the CRE loans, so make sure you look into that. They're on the northeast part of the country, VLY, V as in Victor, LY. Simmons First National, they are the ones that are proud to be paying their dividend for 116 years in Arkansas. S as in Sam, F as in Frank, N as in Nancy, C, SFNC. And then we finish with Prosperity Bank shares in Texas. Ticker P as in Paul, B as in boy, PB for that one. And as always, I'm going to be bringing you a lot of information as we head into the end of the year. What stocks should you be looking at for value in 2026? This is one of them. I probably will have a show on energy because that's another, even though those earnings look terrible. Housing also in what they've all been saying, the worst year in 40 years for some of the housing that includes the like furniture retailers, appliances, all of that. But you can't keep housing down for forever. So maybe there's some deals there. I'll be taking a look there. And anywhere else that we happen to get some good value stocks, because they are out there. And as always on the AI stocks, if you get a big pullback in some of the AI stocks, you should be keeping those on your watch list as well. Maybe you can get them a little cheaper than what they've been recently, but you will get the growth with the AI stocks. And so I always encourage value investors to own both value and growth, even if you can't get it in one stock like you can with these banks right now. It's okay to own some growth stocks as a value investor as well, but try to get them as cheap as you can, as always. And as always, again, I will be back next week with some more value stocks. Be sure to subscribe. Get us on Apple, Spotify, Amazon Music, just about anywhere you can get podcasts. We're on YouTube, on our own podcast channel, Zach's Podcasts, but get us somewhere, and I'll see you again next week.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.